Chọn down arrow. Down arrow.
Okay. Hi. Good evening, guys. Welcome to another session with Vantage. I'm Annabelle, your host for today. So we shall give the participants a few more minutes to join us. Thank you guys for tuning in today. I'll give them 30 more seconds before I start the session. So in today's session, I'll be talking about multi-time frame analysis. So today is the 2nd of August, a Tuesday. Welcome everyone. My name is Annabelle Ang. Okay, we shall start today's session. Okay. So just a disclaimer before I start. Trading FX is a very dangerous and it's very dangerous. The information and content opinions which are expressed in the presentation and following slides are solely those of the presenter and not necessarily those of Vantage. So before you trade, please take precautions and do your due diligence. Oh, sorry guys. Okay, sorry, I muted myself. So anyway, this is a disclaimer as usual, guys. The webinar is purely educational and nothing in this webinar should be construed as investment or trading advice. So please do your due diligence before you start trading. Okay, this will be the team that take you through our webinars. So we have Desmond, who is our CEO and Chief Trader, along with Cassandra, Melanie, Jianing, and Joanne. Sorry, my face is not up there yet because I'm still quite new. So please bear with me if I have if I made any mistakes. I'm here to learn with you as well. So the Forex Army is the finalist for Best FX Research 2019, 2020, 2021, and also the finalist for Best Equity Research 2020 and 2021. If you have any questions throughout the webinar, I strongly encourage you to send them through. We have a chat box and right here. If you can see me. Okay, I strongly encourage you to send me through the questions panel because I have it open on the other side of the screen. Also, it's better to ask the question when we are analyzing the charts, so we won't need to jump back and forth on different setups. So this webinar is brought to you by Everest Fortune Group in collaboration with Vantage Markets. We are an award-winning research firm and finalists in 2019, 2020, and 2021, as I mentioned. We work with many financial institutions to help them forecast where the markets are heading. And now we have a special partnership with Vantage Markets where we are bringing you guys the good stuff every day. Okay, so for today's topic, we'll be talking about multi-time frame analysis. So first of all, which time frame you should be using, the benefits of multi-time frames, top-down approach from a higher time frame to a lower time frame, what to look out in higher time frames, then zooming in into the smaller time frames. Lastly, we'll do some practices and then I will share with you how to design your own strategy. So for those who have just started trading, if you're not familiar, this is a typical chart where you can see your different time frames. You have days, weeks, months, hours in 1 hour, 2 hours, 3, 4 hours. Or we do have the minutes charts, 1, 3, 5, 15, as you can see here. Typically, we don't use the seconds chart, in my opinion, because it'll be too messy. Usually, I will go with 4 hour, 1 hour, and maybe daily or weekly. So typically using 3 different periods already gives you a broad enough reading on the market. User fewer than this can result in a considerable loss of data. So a rule of thumb that is, in my opinion, I go by the rule of 4. So example, if you are trading 15 minutes, you should times 4 times of that, which is 60 minutes. And then you look at the 1 hour time frame. For those who are trading the 1 hour time frame, times 4 of that, you should look at the 4 hour time frame for medium and intermediate time frame. So let me see. Maybe I can show you guys. I can show you guys some real life charts. Give me a sec. Okay, so for example, you look at the XY. So this is a live chart where you can see at the top, these are the typical time frames that I will typically use. Daily, 4 hours, 1 hour. And then these are the rest of the time frames that you can use. Okay. So number 1, which time frame should you be using as a beginner or as a professional? So let me break it down for you guys. So long-term time frame, meaning weekly or daily, they signal the trade's direction. For example, for example, for long-term, meaning days or weeks, they will signal you in a general direction, meaning to say where the market is actually heading. This is quite bullish, upward trend. So the general consensus of the market is that DXY is bullish or going upwards in the ascending trend. Typically, we don't use the daily or weekly charts to take trades unless you are trading fundamentals or you have very strong economic knowledge, because the way you position your trades or open and close position might be too far away. For example, if you are to take a trade here, perhaps your take profit is here. So the price range is too big. So typically we don't use the weekly chart because there could be other movements in between. So for the daily charts, we usually have to monitor economic news like rate hikes, government spendings, typically not recommended for beginners to use. Okay, this is a daily chart. And then for medium charts like 1 hour, it's used typically to fine-tune and confirm trends with a smaller and more accurate price movement. Because from the weekly chart, you can see here, this is only for 1 week movement. So 1 candle represents 1 week's movement. This one can show you your daily. So this is actually from here, point A, 2, 3, 4, 5, 6, 7, point A to here. For example, this shows you a week, while this actually one candle is already a week. So in this sense, it actually shows you more price action, where the price is actually going. For weekly chart, this is going down. Okay, we can confirm that it's still going down, but if you zoom in maybe to a 15-minute smaller time frame, it could be actually going up, a bullish trend. So later I'll touch on how to zoom into smaller time frames. Okay, so for medium charts, we actually use it to fine tune and confirm the trend. And then for short term frame, we use it for trading, because you can then, short term meaning maybe 1 hour or 30 minutes, where you can actually place your position, your trades, your entry, and your take profit in short term time frames, because your price range wouldn't be that far. So it can be more accurate. So this is how we actually put together all the long-term, medium-term, and short-term time frames together for a higher success rate trade. Okay, what are some of the benefits of a multi-time frame? Let us take a look at some of them. Okay, so the benefits of using different time frames, in my opinion, is to give you different perspective. For example, a weekly time frame can actually tell you that the price is actually going in an upward trend, which is bullish. So the general market consensus is that maybe DXY is very strong and it might continue to ascend further. So it gives you this perspective and a view on a specific pair. It also allows you to know what the market participants are thinking. So for example, okay, in the 4-hour chart, when we zoom in, you can see that although in the bigger picture is bullish, we can see that in a 4-hour chart, it's actually going downwards in a bearish momentum. So the benefit of using different time frame is to give you different perspectives and help you to fine tune before you place any other trades, before you take your positions, which level to put your entry, where to put your take profit, your stop loss, etc. Okay, top-down approach. Maybe I can show you guys this example. So for this is on the left side, a weekly chart in 2021. It looks bullish, but on a smaller time frame, a 15-minute, you can see that it's actually going in a downward trend. So what I'm saying here is that different time frame gives you different perspectives. So it's how you analyze it. And it's very important to have a general picture, because like I've mentioned in the first slide, we don't usually use a high time frame like weekly or daily to trade, because your price points, your entry and all that, your entry, your take profit, your stop loss would not be placed at a very accurate price level. So helping you to zoom in to a smaller time frame like a 1 hour or 30-minute will actually give you a more accurate position on where to put your trade entries and take profit. So I'll give you some example. So this is typically how I actually do an analysis. So I'll do a weekly. Okay, these are all subjective. So if you are not comfortable with doing a weekly, you can start with daily. But personally, I like to use a weekly chart first to see a general market feel or gauge. So this is a key level that I'll take note. I'll typically highlight some key levels. And we know that this is currently Okay, another key level here. Okay, failed to break, but it broke here. So it's a very strong bullish trend. Then I'll zoom in to the daily. So you can see the prices are cut very differently. In the weekly chart, it's actually very clean, you can see. But on the daily, you have to drag it far away and it might not be as clean cut as the weekly chart. But you do have to zoom in to give you a more effective and accurate price level to put your trades, your entry, your take profit, your stop loss, etc. So on a daily chart, I will confirm that price is still going upwards, yes. But I will take note that it's actually coming off a little bit here. Okay. So daily chart slightly bearish here. Okay, then I'll zoom in 4 hour. You can see here. Okay, I'll fine tune it. So for example, just now I draw an ascending trend line, but now I can actually fine tune it on a smaller time frame. Let's see where all the points are. 3 touches. Make it more accurate in this manner. Okay. Price has failed to break the trend line and is still going in a bullish momentum. So this is the point where I'll be taking note. Does it break the momentum and goes bearish, or will it continue to bounce off and go in a bullish direction? So after the 4 hour, okay, at this point in time, sorry. Okay. Okay, at this point in time, sorry, I will have a decision on whether I will to take a long or a short. So in this sense, with the ascending trend line and ascending momentum, price unable to break the trend line, as well as the price here has already broken, signaling a strong bullish momentum. I will then zoom further into the 1 hour chart to actually take a long position here. With that said, it doesn't mean that multi-time frames and these trend lines are the only ones, are the only tools that you will use to strategize and take a position. There are other tools such as your Ichimoku cloud or your fib retracement, expansion that you should use together with this multi-time frame analysis to better make your trade entries and positions accurate. Okay, so here on the 4 hour, like I've mentioned, I will decide that I'm taking a long position. Then I zoom into the 1 hour. If the price, like we have seen here, the price failed to break here. So actually a good long order would have been placed here, in my opinion. Okay, let's zoom in again, 30 minutes. Yeah. So the smaller the time frame, the more accurately you can place a order, position order. Yeah, I will have put my order here or even here. Okay. Let's go back. Oh, maybe I should share with you guys. So for the weekly chart, usually people trade weekly, I wouldn't recommend, but daily charts, there are some people who are good at fundamentals, they might trade this based on all these economic announcements that are made during the days. For example, you can see here, Forex Factory. If you do not know, you can see all the important news announcements from different countries or for different currency pairs. So today is the 2nd of August, Tuesday. You can see that at 12:30 a.m., 2 a.m., they're all the financial announcements, economic news that are coming out. You can click on them. You can see the information that at 12:30 a.m. Oh, that is about 12:30. I can't remember. Sorry, this is not the PG time. Okay, let's see. Second, yeah, correct. So at 12:30 p.m. just now, there is a important. These are red color folders are very important news that you should take note. So at 12:30 just now, Singapore time, you can see that there's a Aussie news that came out. So interest rate charged on overnight loans between financial intermediaries. Rate decision is usually priced into the market. So these are the notes that are mentioned here. So this will affect your fundamental trades, or it will actually show price actions. For example, let's go to AUD. So these are very important news. As you can see, this is a daily. Okay, this is a daily chart, and this is Aussie dollar. So this candle right here actually happened because of the news. It might not look as significant as it seems on the 1-day chart, but if you zoom into the hourly chart, it's actually a big swing. You can see here. Okay, let me see whether I can, for example. Okay, this is the, how should I do this? Bear with me. I'm trying to show you that a daily chart might not look like anything or any significant swing on this chart, but if you zoom in, this, the circled part, this is actually what happened just now during these few hours after 12:30. So it's actually quite significant in a sense that it actually dropped from 0.70 to 0.69. Okay, so these are important news that will affect the markets. Economic news, government spendings, inflation rates, all that, Fed rate hikes, all this will actually affect your charts. Okay. Okay, so top-down approach, I've given you an example. Okay. Maybe I should give you guys some more examples. So far, any questions? Please do post on the chat because I am looking at it. If you do have any questions, please ask right away so I can address it. Okay, anyway, if you guys missed out today's webinar, you can go to vantagefx.com. Okay, educational tools, webinars. Okay, this is today's webinar, and it will be recorded and posted later this evening or by tomorrow. So it's also streamed on YouTube, and these are all the recorded series. You can come take a look if you missed out today's. Yeah. Okay. Okay, so common questions. Any questions? Okay, I see one. Which time frames to use? Okay, which time frames to use? Okay, in my opinion, as a beginner, I actually started with a 50 minutes, 5, 15, and 1 hour chart. So a rule of thumb is, remember what I said on the first slide, times 4 of what you're comfortable with to be the medium or intermediate time frame. So for example, if you're comfortable trading at 5 minutes, you times 4 of it. Give and take, you can actually zoom into the 30-minute time frame, and then subsequently the 1 hour to give you more information so that you can confirm your trades and take positions. Usually people do not, you can trade on a time frame on its own, but multi-time frame will give you the extra support or extra knowledge and information that you need to confirm and make your trade more successful. So I hope I answered your questions. So which time frame to use? I started with a 5:15 1 hour chart. So it's actually up to you to decide which you're comfortable with, but I would recommend at least 3 charts to confirm your position or your trade entry. Make sure you also apply the rule of 4, meaning times 4 to what you're usually using. So 5 minutes will give you maybe a 20-minute, 30-minute time frame, and then times 4, maybe a 1 hour, 2 hour chart to give you more information. Okay. So now I'll give you more examples of how I usually do and analyze my charts using multi-time frame. Okay, let's try JPY. Okay, let's try this. Wait, let me see. If you have any requests, you can also post it on the questions panel. Okay, so this is a weekly chart. Generally, I'll start with weekly to have a general sense of the market sentiments, key levels to highlight. Now, what are key levels? So how I define key levels is when more than 1, 2, 3 touches and fails to break. So this is actually a key level. Okay, and then here looks like a double top. Now, actually put it here. This is also a key level. Very important. Okay, after a weekly, I can say that it's actually in a descending trend line, but kind of failed to break here. So I'll take note of this area. Then I'll zoom in on a daily chart, key levels. Daily chart, nothing much to analyze, just that it's going in a downward trend here. Okay, take a note of in a bearish momentum. So if I were to take any positions, I will take note that it's going down on a descending trend. Okay, then I'll go to the 4 hour. Okay, take note that on the 4 hour chart, right? Just now, if on the daily chart, we actually say that it's on a downward trend. But when you zoom into the 4 hour, you can actually see that it's quite a strong bullish bias trend here. Okay. But overall, it's still in a descending trend line. Okay, then you ask yourself whether you should take a short or a long. So in my opinion, I will still be very cautious to take a long because there are no other significant levels or signals that it might actually still go up. So I'll be very cautious because in general, the market is still bearish. Okay, then we'll zoom in to the 1 hour. So if you were to take this, let me delete this, sorry, it's very messy. Okay. So I zoom into the 1 hour. So if you were to take a trade in gold, XAU USD, would you be taking a long or a short? Let me know in the comments. Okay, I can see some answers. So personally, I would stay out of the market at the moment, or okay, this is solely based on trend lines and time charts. But if I were to apply other tools like fib retracement, let me just try. Okay, I'll do it on the fall instead. So these tools are very important in helping you make decisions, which we might cover in the next few sessions. But for now, we'll focus on the multi-time frame. But I'm just showing you guys that multi-time frame used together with other tools are very powerful to create entries and take positions. So for example, okay, there's no trend here. Okay. Okay, now, so if I were to take, if let's say I feel that I'm going into a long position because I've had other tools that help me confirm, I will then zoom in to a 1 hour chart. And this helps, a smaller time frame would help me place my orders, my stop loss, and my take profit at a more accurate price level. So for example, it has broken the 50% retracement level. So I'll be looking at the 61, which is here. So if price were to go up and I'm to take a long position, this will be the price level, or maybe slightly lower, that I take my profits. Somewhere here. Yeah. So what I'm trying to say is that a smaller time frame will help you more accurately place your orders, your positions, your stop loss, your trade size, your trade and exit positions. As you can see here, sorry, let me adjust. Yeah, smaller time frames are more accurate in that sense. Okay, so that's what I mean by the top-down approach, where you go into the fundamentals first, where the market is actually going. You can use the economic calendars, Forex Factory, all that to give yourself more information on the market consensus, the bigger picture, before you zoom into a smaller time frame like the daily, then the 4 hours, 1 hour. So during the 4 hour and 1 hour, during the 4 hour or 1 hour analysis, you should have already a gauge of whether you should take any positions, whether you are longing or shorting the market. And then you will zoom in even further to take your positions, for example, where you want to open your position, your entry. Right. For example, I would take an entry here, buy, and then I would take profit somewhere around here, and my stop loss probably would be something like this. So a smaller time frame would actually help you gauge where exactly and at which price level to take specifically. Okay, let's try more examples. Okay, if you have any requests on which currency pairs you want me to do, you can actually post it in the chat. Okay, let's do something different. Maybe Euro. Okay, now let's try. Okay, let me know in the comment section whether this is a bullish or a bearish trend. If you know, please post it on the comment section and let me know. Okay, so in my opinion, okay, this looks kind of messy, but okay, if you zoom out, it's actually still in a downward trend. In general, the general market is still okay. Euro is very weak, as we can see here. Okay, draw. Okay, so in higher time frames, I will draw some important or significant trends so that I know where the market is headed or the market sentiments. Okay, then I'll zoom into the daily. Okay, still bearish, as you can see. Still downwards, yes. Okay, you can draw your channels, your trend lines. Okay, not a very good trend line, sorry. Here we can zoom in. Okay, this is a nice trend, nice descending trend line. I will draw it. Look for significant levels. Any significant levels that you should take note. I think here would be one. This is a okay. Overlapping support resistance. Okay, highlight. I would say this is also an important and more recent significant trend line. Yeah. Okay. Then I'll zoom into the 4-hour. Okay, now, like I've mentioned, at the 4-hour time frame, you should have a gauge of where the market is going and whether you are taking a long or a short, because you already have enough knowledge from the prior time frames. So in this market, I will actually take a short because there are more confirmation that the market is going in a downward trend. So here at the 4-hour chart, you can see that here would be important key levels. You see, take note that at different time frames, your key levels will be different. But what they do together is that they give you a more accurate confirmation on where the trend or where the market is going. So it gives you all the information that you need before you actually place a position. So on the 4-hour chart, you can see that market fails, the prices fails to break this price level here, and it's still going down in the descending trend. So I'm pretty sure if I were to take a position, it will be shorting. No doubt that you can see that it's slightly bullish bias here, but there were so many time frames that show you that it's in a descending trend. So if I were to take a position, it will be a short. If you're uncomfortable or you feel that you shouldn't take any trades at the moment, then you shouldn't. But there were a lot of confirmations from the other prior charts that is in a downward trend. So if I were to take a short, I will then zoom into the 1 hour and I will place my orders at very accurate price levels. For example, I would take a position here. Actually, I'll take a position here. A short position. Short position. Because this is a key level, it touched almost 3. It touched more than 3 times. So this is a very important level that we should be taking note of. So sell entry here. And then your take profit would be, okay, you can zoom in further to see where, depending on your risk appetite, your take profit level should be different from the rest. So take profit levels will be something that you are comfortable with. It can be in a 2-to-1 ratio, meaning take profit at 2 and then stop loss at 1. It's really depending on your own risk appetite. So do your own due diligence. This is just educational purposes and my own opinion and advice. So if my sell entry was here, I would do a, let me find short position. Oops. Sure, whatever. Okay. Okay, depending on your risk appetite, usually it's 2-to-1. Somewhere about here. Okay, I usually like to place my sell order, my entry or my sell order slightly above this significant trend line to trigger. And then yes, depending on your risk appetite, you should adjust accordingly. So it's about here. So this is how I would place my order. So like I've said, a smaller time frame would allow you to place your orders at very specific price levels. So you can put your entry, your stop loss, your take profits, and it helps you to monitor them, your prices more closely. For example, you can even zoom into a 5-minute chart, or even a 1-minute. So we all have 24 hours a day. So it's depending on how much free time you have or how much time you want to spend on trading or how much time you want to spend monitoring, because not everyone has the time to luxury of time to sit and wait on the charts. So for beginners, if you're doing scalping and you want to make a quick buck, or you have no fundamental knowledge, you can actually trade on a 5-15 1-hour chart. Okay, these are all depending on your risk appetite, your time, how you want to monitor your charts. Okay. Okay, let's do one last analysis before we conclude the webinar. Let's try a USD CAD. Okay, let's see. Sorry, a bit messy. Okay. Okay, let's see USD CAD. Let me know whether this is a bullish or bearish trend. Okay. There are some feedbacks. Okay, personally, I will take this as a, okay, again, double top. These are all the key levels that I'll take note. Kind of looks like it's ranging. Okay, one more important advice that I will give to my audience is that if the market is neutral, if it's ranging and you can't find any trades or any positions to take, stay out of the market. It's okay to not take positions. Okay, but no positions is also being neutral is also fine. It's better than revenge trading or forcing yourself on the market. So like I've said, based on the weekly chart, I still feel that the market is ranging or that there's no general market consensus, although that is slightly bullish here. Then I'll zoom in for a double confirmation on the daily chart. Okay, important. Look out for important key levels. For example, I think this is quite important. Okay, this one. Okay, but I kind of broken out there. It's coming back to test at this important level. Okay, so like I said, market is still ranging a neutral position. I'm not taking any. Okay, on a 4-hour chart. Okay, looks like it's descending. Okay, descending trend, but here is slightly very bullish. So yeah, like I said, I don't think this is a good chart to show you guys. I will change. So I will take a neutral position on this, on USD CAD. It's okay not to take any trades if you can't find any specific indicator or trends. Okay, so for this chart, USD Swiss francs, you can see that key levels. Okay, we'll just zoom into the 4 hours. Key levels are here. Okay. So this is a key level. Significant swing low. Okay. On a very bearish. Okay, this is quite bearish. Okay. And I'll look at the 1 hour chart. Okay, price have been rejecting, failing to break this key level. So although it's a downward trend, but it failed to break this price level. So actually I'll take note of this level. It's still bearish bias, so I will take a short. So if price breaks here, my entry would be here. My short entry would be here. My stop loss would be somewhere above, depending on your risk appetite. So and then my take profit would be, your take profit level could be actually 2 to 1, or if you want to find any other levels, significant levels, you could actually do it. Then my take profit would be somewhere below here. Okay, because this is the next significant move. Okay, so this is how I actually analyze my charts using the multi-time frame analysis. Any questions? Okay, take note that this webinar, this series is actually recorded, so it will be posted on Vantage FX website. If you want to rewatch or refresh, do tune in. can be found here. There. It's also streamed on the YouTube. Okay, no questions from the floor. Okay, maybe I will cover the last part of my slides. Okay, some common questions. Okay, common questions that I have noticed would be how many time frames I should be looking at one shot, or how many time frames I should be looking at to confirm my trade positions. In my opinion, I feel that looking at 2 to 3 time frames would be the best or would be good enough, because if you are looking at 4, there will be too much information and it's gonna be too overwhelming. It would actually corrupt your initial position or initial gauge of the market. So if you were to take a trade, just look at 2 to 3 time frames. Typically, I would look at a daily 4-hour, 1 hour, the rule of 4 charts, and then I would take my positions. And remember, if there are no positions to take, staying neutral is fine. Yeah, that's a very important tip that I should give all traders. So thank you guys for tuning in to the Vantage webinar today. I will see you guys next week. Thank you.